Good morning, everybody. This is Jeff Scott. It is September 16th, 2018. It is 8 a.m., and this is my weekly review. Just a couple of warnings. My voice is plus minus today at best. I am using my external microphone, so if it sounds horrible, it's because I think I'm catching a little cold, too much time on the golf course this weekend, I guess. I titled today, Climbing the Wall of Worry. And again, this is September 16th. Since it's 8 a.m., futures are not available. As always, this is for educational purposes only. Anything I say should be taken in the spirit of education and not investment advice. I'm a doctor, not a broker. I am independent. That means I have paid for the tools that I use, and I do not take anybody's advertising dollars, nor do I take anybody's advice on what to say. And lastly, trading involves risks. I do often talk about options. I'll talk a lot about options at my upcoming course, but I just want people to realize that there are those that think that options are very risky, and I refer you to the OIC Options Industry Council website for some great educational material. I, for one, think that options supercharge my portfolio while reducing some of my absolute dollar risk, but I do acknowledge that without knowledge, options can be dangerous to your net worth. So it is official. I am having the HGSI Doc Live Be Your Own Guru meeting in Palm Beach Gardens on November 28th, 2018. Limited number of seats are available. It is a $500 fee. You will have pre-webinar or pre-seminar webinars where I'll review the vocabulary that I use so everybody will know what my indicators are and how I use them before they get there. I will also do an options introduction because I want to make sure that no one sits there wondering what a put call is and what basic trades are. And then I'll probably have a third one where I just do open mic and answer questions and look at the market. At the seminar, I will do what I traditionally do. I will review the basics of my trading, which is what I learned from Ian and others, but also the best of many other people. For example, I did a program with George in Orange County in April, on April 8th. And if you go look at your video for that weekend, you'll see it because I called it out on the video. I talked about Jesse Stein, what he looks for, and I called out Tandem, TNDM. On the next slide, you're going to see a picture of what Tandem basically bought me. That was a great trade. I gave it to you at $6. It's right about $50 right now, and that's 5 months. Top-down approach to the markets. I'll look at how I use HGSI and other tools to look at markets, industry groups, and best stocks. Then how I take the tools and based upon the direction of the market, find my A trade. I'll look at some of my best trades in the past and some of my trades of current time. You got to know when to hold them and know when to fold them. Now, Ian used to sing it. I promise you I won't sing. But stops, position sizing, and money management. Then I'm not an options guru, but I use a few options to hypercharge and protect my portfolio. I'll show you what they are. We'll talk about earnings roulette. We'll look at Netflix and Ulta this year. And putting it all together, I'll do a nightly review perhaps after dinner on that evening. That is Wednesday. Now, on the right, I don't normally do this, but 2 people this year, well, more than 2, thanked me. But I got this email very recently when I announced this, and this is from NHI, who was attending at last year's December meeting. By the way, I owe you many thanks for the Netflix option suggestion last year. The total game for the position that I took got me off to a great start for 2018 with a gain of over $123,000 on an initial investment that closed out with a risk of $35,000. Now look at that trade. That is almost a 4-to-1. It's a 3.5-to-1 trade. And he was probably in the trade for about 4 weeks. For some people, that would have got their nut for the whole year. And yes, there was risk in that trade, but a great return. We'll look at that trade a lot during the meeting because I didn't wait to the day before earnings to initiate my position, or the day of earnings, 'cause I think the day before is always a holiday. There was a great setup at the end of December. And then from someone else, looked at the Scott Synthetic, which is one of my favorite option trades. And I'm sitting here wondering if I really just made 391% since yesterday. 391% was on his investment, 160 would have been on his maximum risk. Again, how do you use some of these things I have to actually make money? Because frankly, guys, it's not about what your percent return is. It's not about your expectancy. It's not about how many trades are right versus wrong. It's how much money you put in the bank. So, a little bit more information. You will have dinner on me Tuesday. Now, this is the new tandem boat. Those that were here last year know I had a 31-foot whaler. This was such a good market. I bought a 35-foot whaler and I bought a yacht with my proceeds from trading this year. Plus, I had to put away some for taxes and a few other things. It's been a great year. If I'm concerned that I have too many people for a yacht cruise on the yacht, then we will go to a local steakhouse as we did last year. That's on me. Breakfast, lunch, and snacks during the meeting are be provided. You'll get screencasts of each presentation as well as PDFs of all slide decks. And then I have a number of indicators that I've created for TOS, TradeStation, and now TC2000, which I freely share with attendees. If you're interested, you need to send me an email confirming it, but you're not in until I receive payment, and I prefer PayPal to mdonc@mindspring.com. I will send all that information, including my mailing address for those that do not want to use PayPal. Paycom was another good stock this year. I'll send that out once I get your email. For those that have already said they're interested in coming, please reaffirm. And if you need my address, I can get that for you. John Person has a meeting on Thursday, Friday, and Saturday at the same hotel. Those that listen to me know how much I value what I've learned from him and how much I like him as a teacher and friend. And it turns out he's a pretty damn good golf instructor. I actually beat him on the back nine yesterday. He's been golfing forever. I've been golfing for less than a year. And everything I know I've learned from him on the golf course. I highly recommend his meeting. Go to his website, personspivots.com. You can read about it. I may get him to say a few words at our meeting, and he'll probably come to the dinner before. But make it a 4-day event, and we have the advantage of not only going first when you're still fresh, but we'll have in-the-market trading that day, which we don't normally have when I do a Saturday or Sunday meeting. Now, on the right-hand column, if there's enough interest, we can have a pre-meeting golf tournament at my club. Fees will apply, so that's greens fees, caddy fees, and carts. I may elect to subsidize it some, but I'm not going to subsidize it all. And it's Old Palm Golf Club, if you want to look it up. It's one of the best courses in Florida. And I do not intend to do an internet broadcast this year. I do these meetings because I like networking and seeing friends and having fun. I don't do them to make money, and therefore it just added hassle by doing an internet. Now, I call my education Be Your Own Guru. And why? Because I was fortunate enough in the early 90s to meet this guy over here named Ian Woodward. This is before we had the internet that we have today. We had bulletin boards. We had a company called Telescan. And Ian, one of his first things he would say is, "Jeffrey, I'm not the guru, but I'll teach you to be your own guru." And he is so right. It's better to learn how to trade yourself, be your own guru, than rely on someone else because, hey, I could stop doing this tomorrow, or my stuff could stop working tomorrow. You need to be able to stand on your own 2 feet. So Ian and I started with Cancelm O'Neill. Cancelm has been approved by Morales and Catcher. Ian worked with George Roberts of highgrowstock.com fame, and they created HGSI, the software, and then added special things to it that I think improve it. It is by far the best integrated platform for top-down analysis and charting. I'll come back to integrated in a second. Ron Brown went from the audience to a partner of Ian. He continues to support the program like I do, where I stay pretty much with the base of what I learned from Ian plus others. Ron has gone beyond that with volume spread analysis. Here's John Person. Now, my history with John, just so you don't think I'm a paid shill, I bought his indicators, I remember, for like $2,500, $3,000, probably a week after they first were offered. So it's at least 10, 12 years ago. Now, I know nobody else has ever done this, but they probably sat on my computer for about 4 years or 5 years, and I never used them because they looked cool and shiny when I bought them, but I didn't have any idea what to do with them. Then I listened to him at a live seminar, and I said, hey, I can use this. And now they become the primary part of my arsenal. Now, I read his books. I've been to multiple live seminars and mentoring. I've expanded my ownership of his tools and bought some of the newer things. And now he's become a great friend, my golf tutor, and my buddy. But that's only because I walked into his office when I moved to Palm Beach. And I said, actually, I called up Mary, his wife, and I said, could I come by and say hi? I just moved to the area. And, within a couple of weeks, he gave me my own trading room in his office, although I went back to work like an idiot. So that's gone. But John's a great guy. I've learned a ton from him. On the left, I learned what to buy. And then on the right, I learned how to buy it and how to hold it. Holding something a long time is where you make money. Just a little hint. You can get nice return percentages, especially if you annualize them. You can get your win-loss ratio up high. But my biggest wins have not been day trades. Van Tharp is the king of money management. Big book, some psycho, babble, market psychology. Highly recommend it. And then I'm going to go back to my comment about, I said, the best integrated. Sager down here, or they call it Metastock Cigar, has a company called Superior Profit. It's in Singapore, so it's superiorprofit.co, C-O. He has a number of indicators and packages and a program called Q as well that I now use routinely. And Q is another tool that I could top down sector, industry group, and stock. It is not as simple to use as HGSI. It requires Thomson Reuters data, which is good for a cigar because much of his business is ex-US and he needs non-US stocks. And it doesn't have the tight feel of the integration with charting, nor does it have my indicators in Metastock. All that said, I find it to be a useful tool, and I have it running during the day, the Q software, so I can get an idea of what's moving on industry groups, etc. So I've talked with Cigar, and on one of the pre or post seminar videos, he is going to do a session or record a session that I'll play at the live meeting as well for my attendees. What do I need? Oh, and by the way, how did I meet Cigar? I played with his indicators on a trial for Metastock, which is Thomson Reuters, and I really liked him, and I thought they'd add to my trading. Then I found out he had TradeStation indicators, which is better for me because I spend more time in TradeStation today than Metastock because I have my indicators in TradeStation, although I am talking to Metastock about an add-on potentially, mostly to help me. And I started talking to Cigar, and his stuff is monthly. So I had to. I bought a 15-year subscription because I was afraid. I don't know what I was thinking, except the stuff became something valuable to me. So Cigar probably thinks I'm crazy, but that's when we got to know each other. What I need in my desert style, I need TradeStation or Thinkorswim. And when I say those, I include all the indicator sets that I routinely use. I need HGSI and EdgeRater for analysis. I do like seasonality, although this isn't the time that I'm finding a lot of seasonal trades. And then a number of websites. Here's highgrowthstock.com. Those who've been here before know there's a free 30-day trial, no credit cards needed. And if you click under investing strategies, you'll see a bunch of videos by me, Ron Brown, and others. I again want to emphasize, despite my email address, despite what I call myself, HGSI Doc, I have no financial involvement, except sometimes I pay for HGSI like everybody else. But I've never paid anything to promote it. Nor do I get a spiff or bonus if you sign up. Stock patterns are cyclical, broken record. All you got to do is take this pattern and rotate it about 30 degrees to the left, so it's actually heading up. And this is what, and then truncate the top half, because every time it looks like we're about to fall, we start to move up again. Every time it looks like we're going to break out, we go sideways and fall. Now we're doing this as we're retaking old highs. We're definitely going up at that 30-degree angle or so, but this is not an easy market to trade. We're not seeing these long periods of a bull run, at least not since perhaps March and April. So therefore, I have raised cash, taken smaller positions, sold premium. And I've also, because I am concerned about giving up my significant gains of this year, I have bought puts and I have bought some contra ETFs. I have sold some calls to pay for it, and I will talk about what that's done to my portfolio in a few minutes. Sector review, as I look at the strength in the markets, I'm going to talk about interest rates rising. Well, although I didn't love their chart patterns, they're also beaten up. You can see financials where my arrowhead now were green on Friday, as was broker dealers, credit cards. I'll tell you what else looked really good. Perhaps really, really good was insurers. Continuing to look at this list, there was strength in energy on Friday, probably related to a hurricane. Industrials were strong. Staples and discretionary both were laggards on Friday, at least on this chart, as were utilities. Healthcare, not so hot. Transports look strong. Home builders, despite interest rates rising, were strong as well. And then gold, because the dollar, I'm not sure, this is copper, some gold, actually some strength in the metals. It was a week that I thought was a challenging week to trade. I made money on the week, but most of the money I made was in one day. I think Amazon went up $50 one day, and that's my biggest position. And then Thursday, Friday, I saw a lot of things that had been big leaders. Look at the Canopy growth, Kronos, even Tandem sold off. Now, they may be setting up some high-tide flags, but there were certainly short-term sell-offs and growth. Let's go very quick into Thinkorswim, and let's look at a couple of market charts. And let's just enlarge this by going into that little box in the upper right-hand corner of the chart and waiting for it to cooperate and give me a, come on. There we go, maximize sell. So very simple charts here. I'm using candlesticks, obviously. I have a 17-day simple, a 50-day simple in yellow, and a 200-day simple in red moving average. I got on-balance volume on the bottom. I got volume on the top. And let's put a whole year's worth of data on here. And what do we see on the E-minis? Voila, we finally took out the January highs. That's good to see. And now the interesting thing is, let's see if I can, I don't usually draw a lot on this, but let me see if I can put a trend line in here for a reason. This is on, and I'm not even sure that's right, but we've broken through. We actually pulled back and into the 17-day, which held, and we're breaking out again. I have to look at this and say that this is bullish. You're breaking out to new highs. Here is the recent new high. We hit this on August. One could certainly be a little bit more cautious until we take out that new high. But, I talked about easy markets. This is an easy market. This is a period of cycles, up and down, up and down. Remember, I just said tilt that thing to the left. So based upon this, we're in the next up cycle. But I just think we're having very short up and down cycles. As I said, a very difficult market to trade. But if I had to be a buyer or seller, I'm buying. If I look at the NASDAQ futures, we again set a new high here. We had taken out the old high from January, February a long time ago. Same pattern, pull back to the 50 and bounced, and this is the daily. It was down for about 4 or 5 days, and it broke out on Thursday. Friday sort of have a spinning top. Is it done going up, and are we going to cycle back down here? I'm not sure, but are we in the same pattern? Yeah, it's coiling in an uptrend. That's the NASDAQ futures. And I like looking at futures. Sometimes I pick stuff up I don't see on the cash markets. If we look at the Dow, has not taken out its annual highs, but like everything else is this coiling uptrend, 30 degrees. It's at the high of that uptrend, so perhaps if there is a correction this week, maybe the Dow will lead to the downside. The Dow stock seems to be more sensitive to China. The Russell, and this is actually an ETF, not the futures, but I could get us the futures. Let's see what hold on one second. Oh, what are the futures? Come on, Jeffrey. Oh, I'm sorry, I forgot something. All right. So on the futures, the Russell, like others, peaked about not a month ago yet, a couple weeks ago. Same pattern, a little bit junkier, went sideways here, broke out, pulled back. A 50 looks like it's support again. And, this one looks to me, if I had to choose, it's probably going higher as well. Here is something that has not been strong, and that's a good thing because we want the VIX to be weak if we're bullish, and it continues to fail multiple times at the 200. This is what happened in January when the market sold off, and we've just been oscillating in the VIX just like we have been in the markets, but at a very low level. And then the dollar, which when you look at this chart, it looks like the dollar is super, super strong, and it has been strong, although it's broken below its moving averages here. We had a good day on Friday. Let's just take a look at the weeklies because I think the dollar looks a little different on the weeklies. Also want to point out that the dollar looks different in the cash markets or in the ETF than it does on the future market. So here's the dollar weekly, and let me put some more time on this. All right. On a monthly chart, you can see that back 2 years ago, or less, a year and a half ago, the dollar was 103.82, and it's down to 94. So the dollar is off of its highs by quite some bit. And let me go back to the weekly, 3-year weekly. You can see 103.82. And we have actually failed at the 200. Now, if I was looking at a stock here, and the stock had pulled back, ran up to the 200 and failed many, many, many times, I would look at a short this. So maybe the dollar is going to weaken. If that happens, that'll have impact on your portfolio, which could be good for stocks. And you can see on the weekly charts, E-minis, NASDAQs, the Dow, and the Russell show you why it's been tough being short in this market. They're certainly in powerful uptrends on a longer time frame. All right. Sometimes I like to put them all in one chart. This is daily on top, weekly in the middle, monthly on the bottom. The first column is E-minis, and the NASDAQ, Russell, NYSE, and then the Dow futures. And when you look at the monthlies, you can see the strength in the market. The weeklies look strong, and frankly, even the dailies look like they're beginning an up move. Just these up moves and down moves have been so darn fast. Once you convince yourself to go long, the market turns around. Now, what's going on underneath the market? Rates rose, and we're getting up to the levels on both the 10-year and on the 30 years that I start to see the markets wobble from. So that might be a concern of rising rates could affect the market. Now, rising rates are good for banks, especially regionals and insurers. The banks have been beaten up, and I didn't see great moves there. And the insurers, a lot of them are down on their bottoms. Boy, did I see a lot of insurers starting to move this week. And then let me go back. I think it's easier to see here. This is the yield curve down here in blue. This is the S&P 500 in, I guess, magenta. These are the various interest rates from 3 months in red, 6 months, all the way up to 30 years in orange. So this is the flattening of the yield curve. And when you look at the spread between the 2s and the 10s, this is the blue. It's getting lower and lower. Now, CNBC will have you think that the market is in trouble. And when I look at it, what do I see is when the yield curve falls, the S&P's running up. It's when the yield curve starts to raise, when they start to tighten, that the yield curve starts going up is when the S&P falls. So we're going to watch and see what happens, but you're going to hear lots of news about that as we get closer and closer. Now, I look at a lot of these things because they give me a clue to whether it be long or short. AD line setting new highs, both the small stocks and mid caps, both index and AD line. In fact, if you look at the AD line, the NYSE, a series of bullish ETFs, and then bonds here. One, this tells you why my contras are not doing well, and two, the rising rates are bad for bonds. That's the message I get there. Breadth improved a little bit this week. It really changed a lot on the 3-month new high, new low. But it doesn't put you in a position that says the market is so overpriced it's got to correct. It's sort of neutral. Now, on the McClellan goes higher and the summation index goes lower and the oscillator fails to break the midline. This is the daily. This is the weekly. That's divergence in my book, or at least some hint of divergence. And maybe I should be concerned. I am. That I do expect this market to have some mild corrections. I don't think this is going to be 2007 and 8 all over again, but that's one of the signs that worries me is the McClellan divergences. Now, I use EdgeRater to automate things that used to take me a while to do in spreadsheets. These are the buckets for this week. 50-50, a neutral market. 11-12% of the stocks above the Bollinger Bands and the S&P 1500. That's not a strong signal. It's kind of spread out equally. So it's a confused looking market. Now, a lot of discussion on the HGSI group about all these Hindis. And you could see on the NYSE, we've seen a series of Hindis. And on the NASDAQ, the same thing. Now, normally a Hindi is a really bad signal, and it might suggest that we have a significant market pullback coming. Go back and look at the Hindis in 2007, 2008. Only 1 out of 4 Hindi is usually a significant move. When you start to see bunches of them is when you should pay attention. Now, the interesting thing is the new highs continue to go up. So that is one thing that may be different this time. Here's something else, and I think one of my video observers for asking the question who said, well, what is the commitment of traders report showing? So this is a futures thing. It's put out by John Person. You can get it from his website. He gives you the text for free. The indicators cost money. And we could see that since a bottom in 2016, a sideways market for almost the whole year in 2016, a big run up in the market. The blue shows me that the professionals were buying, the professional money managers, the hedge funds. The yellow is indicative of the small traders like us. And then the red I ignore because those would be someone who's using it as a hedge. So if I was super long the cash market of the S&P 500 and I wanted to hedge, protect me, I might buy puts on the E-minis. Whether I think the market's going up or down, it's irrelevant. I'm buying these as a hedge. So we don't look at those. So what do you notice? This entire run-up since April of 2016, except for one period in time here when the market softened, the professional money managers on the E-minis and on the NASDAQs are net long, although much less net long on the NASDAQs. And the commercial, or the private folks on the E-minis are still positive. It's right about here. But on the NASDAQ, the individual investors have actually gone negative. since we are contra to what the market likely does, I don't see a bearish picture here. So when I did go back and look at, for example, here is 2008, and the market's selling off, and this is what piqued the interest, and I thank him for pointing that out to me to go look. As you could see, as the market was falling here, and frankly, even as the market was rolling up in 2008, you could see the professionals, for the most part, were negative. And what happened at the bottom of the market? They went positive. And this is the NASDAQ. It's even more obvious. Hopefully it won't change my time frame, but we'll see. On the E-minis, here's peak in 07. And you'll notice that at this peak, the professional money and the whole way down were negative, while us idiots, us small-time investors, were long. And then we gave up as we went into the bottom, and the professional guys started buying. So right now, professionals are buying. So maybe that might be some feel-good signal that the Hindenburg isn't going to kill us this time. Now, market tone, I look at the Woody indicator here. We'll talk about it at the live meeting. It's clearly yellow, which is neutral. No red, no green. Sector strength, mostly neutral as well. Again, looking down here, mostly yellow, one red, one green. So I can't really see big difference there. Canaries in the coal mine, kind of like the market oscillating around the 50-day moving average, although they've been trending down, not up. And obviously price line is now called bookings. And we know Tesla's been clobbered. Never helps to have your CEO smoking dope on a video. Apple and Amazon have done great. Netflix stubbed its toes. It's doing better. Facebook has been challenged as well. They may be irrelevant as an indicator of market strength. So many of you know that I put together a list a couple weeks ago. And I call it the Summer Solstice Index, and that was the title of that weekly program. And this is pretty exciting to me because I came up with a list of stocks that were leaders, and they're still leading, trading above the 8-day exponential moving average. And this is my early warning sign of the market turning back. And so I will continue to monitor that closely and report to you on Sundays. And if I remember, at my live meeting, I'll review how I constructed it. Know your news and earnings. The red dots are the things that are important: jobless claims, Philadelphia Fed, existing home sales. Looking at it, you got the Baker Hughes, which is important. Lots of expiration of options on Friday. Energy reports and housing on Wednesday. What we don't have a lot this week are earnings, but we have some big ones. FedEx is big. Copart's been a big leader. Micron has sold off hard, but still has some good fundamentals. And as I say down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings dates are. Here are my thoughts. We're climbing the wall of worry, which is why I titled it. You got Manafort and Cohen, please, in exchange for what? I think there's an assumption that they've got dirt on the president. China tariffs are to expand another $200 billion. The good news is we don't sell that much to China. They're getting to the point where they can't raise there's nothing that can raise tariffs on that aren't raised yet, except for maybe it's going to start impacting on Apple. Entropy in the White House. It's amazing how this market continues to go up with the weekly Saturday Night Live escapades that seem to be daily in the Trump White House. And the midterm elections may be challenging to the GOP, where that entropy may outweigh the economic boom that we're seeing. I mentioned rising interest rates and flattening curve. Interest rate sensitive stocks this week were down. Utilities, housing, REITs, MLPs, except for Friday on housing, did not look great on my charts. Insurers look poised for a rebound. And take a look at some of the aerospace and defense stocks. Look at Rockwell Collins, for example. You'll see some stocks that have been basing that might be ready to take off. While many pundits continue to call for a crash or major correction, the averages continue to slowly move higher, and the shorts are suffering. Now, I have not loved the last few weeks of the trading. It's been churning much higher than a month ago, but I'm still mostly long, although I have insurance policies. I have spider puts. I've got contra ETFs. I've sold out of the money calls to pay for them by generating premium. Like my life insurance, I hope I don't use it anytime soon. But this allows me to sleep at night. However, it does put a negative drain on my return because I'm mitigating. So if my longs go higher, I'm going to mitigate some of that return by using part of it to pay for the protection. But if the market crashes, I probably won't make money short term on a market crash, but I'll certainly mitigate some of my costs of losses. All right, that was longer than normal. And again, let me just reiterate for anybody that was sleeping in the first part. My meeting is on November 28th. It is a fixed date. I'm committed, and I'd love to see you there. And on my boat and a few other things. All right, so in TradeStation, I didn't do this last week, but because the market's sort of at a tough area, I'm going to look at my 6 points analysis of the futures and how I sort of determine for myself whether I want to be long or short in this market. So let me just do what I have to do here. That's not what I wanted. I want to remove that. Add a blank row. Add. All right, so I'm going to start with the E-minis. And if they all look the same, we won't continue. So this is the E-mini daily on the left-hand side, weekly and monthly. I use 5 or 6 things on a daily basis to give me a sense if I want to be long or short here. Number 1 is the John Person PPS signal, long or short. That's the green arrow and the red arrow. That's long. Long on the weekly, long on the monthlies. 2, what is the color of the paint bar? That's Alexander Elder Impulse Indicator. Green means I could be long or hold. Red, I should be short or hold. Blue is neutral. I can do whatever I want. It's green, it's green, it's green. That's good. Number 3, where am I within the Elder envelope? It can right up the top, but usually if I break below it, I come back in. If I get too far above it, like the high jump, I come back in. We're neutral. Number 4, do I have any evidence of MACD divergence? Now, higher highs, and we got lower lows on the MACD. That's MACD divergence. Now, it's not meeting it yet because we're not at higher highs here, and we did get a higher high. No, we did not. So on this higher high, the MACD histogram was not as high, and therefore we painted these red divergence bars. And that's something that will put pressure on the market over the long run. We've worked through those, but we do have some MACD divergence on the weekly. Then I put my BDIs down here and make sure my high jump's not at 100. Because when it gets to 100, the market has a tendency of rolling over. It hasn't been at 100 for a while because of the sell-offs. And then I look at my bongos, and I look at the middle one here, the weekly. That's the most important to me, and that tells me we're good. E-minis look fairly strong here. NASDAQ futures. I'm going to look real quickly, and they're blue on the weekly and the monthly. They've got the same MACD divergence. Look pretty strong here. Russell futures. In a sell signal, all right, on this pullback, but did have a green paint bar here, which tells me that this is might be something getting ready to reverse. It's in weekly and monthly. Buys, the Dow futures look pretty good as well. Let's take a look at the dollar. Weekly sell signal came in this past week. It's in a daily sell signal. And I guess that's enough. So that gives me a sense that I should be looking at longs in this market. All right. Then I'm going to go into HGSI. Now let me show you what I like and why HGSI to me is more integrated. At the same time, at the risk of crashing my computer, I'm going to start Q up. All right, so in HGSI, what I typically do is I start at Major Markets Plus. In my designer, I hit the warehouse view, and they should pop up over here, but I've got a lot of stuff going on right now. There they are. Then I'm going to put a top-down view, which is going to be price and volume, weighting mostly the near term than the long term. The first thing I notice is that volatility is on the bottom. When the VIX is weak, my stocks do well. And the small mid caps, NYSE, the Dow, big caps, the Russell, everything's up at the top, including the NASDAQ composite. So that tells me, I'll come back to this, that this market is stronger than not. All right. Then I like to just jump in and look at some of these. And I'm going to probably go quickly because we've been talking about the indexes a bit. But for those who've not been here, I'm a man of repetition. I do the same thing every every night. I look at things the same way because that's how I get good. All right, and let's go into a simple view here. Same moving averages, the 17, 50, and 200. The magenta one is an 8-day exponential. You notice up here we've been firing Hindis. We are in a uptrend here. We are coiling. We're in the upper half. I'd be buying, not selling here, but right now we are uptrend within trend lines. On the Dow Jones Industrial Average, looks just like the S&P, although it hasn't taken out the prior highs. If I look at the NASDAQ, you'll see similar pattern. I mean, as much as I'd like to say that this is a hard market to trade, and it is a hard market to trade. I mean, channelingstocks.com. We're in the middle of the channel. When you're at the top, you know to short it. When you're at the bottom, when you're long. Here it's neutral. Again, I'd probably be a buyer here and not a seller, but I think it's closer to neutral than blaring. And then here's the Russell 2000. And this one I look at differently. And this one I almost wonder, hold on a sec. This is one where you can ask, does resistance turn into support? And if so, then we're about to start another leg up on the Russell. So markets look strong, neutral to strong. And again, if I had to choose, I'd be a buyer, not a seller. If I look at the dollar ETF looks a little bit different than the futures. Sitting right on its 50. And notice the daily bond goes red, the weekly bond goes green. If I look at the weekly, you can see it's stronger than the futures, living above the 200, but certainly not a rip-roaring strong dollar. The VIX, which I already saw on a couple of different things, should look weak, and it does. It was the worst trading, but it's kind of at as low as it gets. Low as it's been getting, I should say. It's gotten lower in the past. And then gold and silver are places to make money to the long side. Runs up to the 50 and fails on gold. And on silver, yeah, hard to be long. Now, there is no market analysis in Q. Now, Q starts, and this is where Q is kind of interesting. I'm not going to say he did this because I asked him to. That would be egotistical of me, but I had put a suggestion in. It might be nice to see some of the best and worst performing stocks on a given day. But what Q does is it ranks the sectors, and I can't tell you how the ranking is done. I don't know. And if I can look on a 5-day pace, it tells me that energy, information services, and materials over the last 5 days have been the biggest movers, but over the period of time, the strongest group has been financials, and that's interesting. Popped up on one day. It's the strongest group on Friday overall, and that's interesting. I remember I mentioned the rising interest rates. So I could look at what's moving now, or I could say, look at the financials because they're one of the leading groups. If I click on financials and I hit the drill down, I open up the various groups in financials. If I rank these, I can see that reinsurance is multi-line, life and health. These are all, insurance is up at the top, not the banks. If I look at 5-day pace, I see that this reinsurance has been one of the fastest movers in the market. Now, if I drill down on reinsurance, I can now get some of the stocks that are in the reinsurance category. Then this becomes more of a fundamental analysis where I'm more of a technician, but I might want to, and this is Korean, that's why I don't know what that is. I don't know who MHLD is, but I noticed that it's got, and blue is good. Good valuation, primary and secondary, so it's not overpriced. It's got lousy EPS growth, but good earnings quality, high likelihood of a short squeeze. We might look at MHLD. Now, I contrast this, and again, I'm a fan of both programs. But as I said, I'm more of a technician. I'll contrast this. Let me just undo all the things I just did. It's a pretty cool program, and like I said, I'm going to have Cigar do a program for my users or followers. Here, I'm going to go to 07 industry groups. I'm going to open up the warehouse view, hit this, and I'm going to go to 2-day force. And what it's going to show me is what's been winning. Semiconductors, e-commerce, oil, gas, services. And it's interesting, I mentioned some of the defense plays, and we'll look at them. Here's aircraft and parts, life insurance, and we'll look at some of the defense stocks. Now, there's a thing called top-down analysis. In top-down analysis, I look at the strongest industry groups, and then I look at the best stocks in the industry group and build my watch list. It's timely. I can do it very quickly. It's what I do during the week. A bottoms-up approach would be more like my approach where I accumulate lists of stocks and I end up with a buy watch list or a consolidate buy list of 684 and I look at them one at a time. I can't do that except on the weekend. So the top-down approach is probably the best approach, and we'll talk about that at my meeting. But let's look at what we see. Semiconductor devices, change to industry group. Now I'm going to introduce something that's in my, I know that prior attendees of my meeting will have it, and if you don't have it, come to my meeting. And what I'm going to show you is sort of a secret weapon chart. It's old, but it's a goodie. And I'm going to go and file, new charting window. And I'm just one little weekly chart here. And I'm going to go into, and those who've been to my meeting, look for Chris Wilson's views and pull up the weekly versus the SPX. So, I want you to look at where that line is. And this just happened. I didn't really do this by plan. But what Chris Wilson, too many Chris's in my life, did that was brilliant is he took a weekly candlestick chart. He has the relative strength of the index, which I believe is the dashed one. And we could figure that out very quickly by editing the window. Nope, we don't want to do that one. My bad. We want to edit the indicators here. We want to indicate the current view. So in red is the relative strength of the index to the S&P 500, and the S&P 500 is in blue, and the dashed one is the specific index we're looking at or stock. Here I should have left that up there, I apologize. I've got the 21, the 10-week, and the 40-week moving average. And then on the top, I have the weekly bongo and the kahunas. And what I learned a long time ago was when I take the combination of the weekly relative strength of this stock surpassing the S&P 500, followed by, and then I look for a weekly bongo turning green and a weekly kahuna, and I start to take out these moving averages, I want to go bull. I want to go long that stock. All right? Here I'm way extended. So let's look and see what we find in semiconductors. And I didn't do it the right way, so let me go back up here, my warehouse, and make sure I double click enough that when I drop it down, it's not alphabetical order. All right, so let's look. AMD, powerful move, picked up in April by the Chris Wilson super powerful weekly chart. A little bit too extended for my taste. NVIDIA, it looks like the market. It's a little looser. It's got okay technicals, less than the PE. I'd probably pass here, although it's been a big winner. Micron, here's where the earnings per share growth and revenue have been super strong, and the stock has sold off. Is this an island reversal? Are we going to come back up? Look at the relative strength, how poor it is. Look at this weekly hammer. Maybe we bottomed here. It's got earnings on Thursday. The multiples for the growth rate is 21 to 80. I would say that this one is probably going up, but it's a risky play. It's catching a falling knife, but I might rather buy something that's basing. Qualcomm has had a nice move. It's too far gone. NXP, this is one that was sort of in acquisition hell, held up by the Chinese. Again, a big hammer on these chip stocks on the weekly bar occurring on Wednesday in a reversal. I don't like to buy things that are in downtrends. Here's a stock that was sideways. Now, you had the cross of the relative strength, you had a kahuna, and you had a weekly bongo went green. I might want to look at this. This is a viable gap up. Earnings are out. This is PI. Wasn't my favorite by any means. Broadcom, maybe, but not yet. IDTI's takeout, so we can skip that. Marvell Tech, not yet. I mean, these stocks have been beaten up, and I only go as far as the industry group. So go back to the warehouse view, and let's hit back, and let's look at e-commerce discretionary and see what we can find here. So we got Alibaba, turnaround perhaps, but again, it's still in a downtrend. Etsy, this is one of my favorite holdings. You want to buy this in January. What happened in January? Relative strength breakout, took out moving averages, kahuna, and a new weekly bongo green. Actually, I don't know if that's January or February. It's beginning of February. So it was out here. And it's had a beautiful run from 21 to 54. Still a beautiful stock. I suspect it goes higher. But that's had a big run already. Stitch Fix. Don't get this one, but also has had a big run already. I'm looking for stocks that I can buy tomorrow. No, Wayfair's another one that's had a big run already as well. I don't know if they're on the Amazon run. Take a look at Overstock and Egg. So, pull back, sort of basing to a downtrend. I don't see it yet. I don't like the fundamentals. And then Chegg. Here was an opportunity when you went through the moving averages down around 18. It's at 32. This is one that I have had on and off my buy list. I don't love the short-term earnings per share growth, but I like the group. It's in an uptrend. It's based. If it broke above the PSAR dot, I might find it to be interesting. And I'll continue to go down the top 10. The next one down is oil gas services. Boy, these have been losers this year, especially number 2. I mean, eventually they're going to become a good deal. But Transocean Rig, I like putting a monthly chart on this. Yeah. Boom. Yeah, someday this may be good. I don't know when that day is going to be. It doesn't seem to do much anymore. It did break above its the relative strength of the S&P 500. There's no kahuna. It's still in a downtrend. Yeah, if you want to buy rig, it's a good time to buy it off of the 200. I don't want to buy rig. Halliburton. It's still alphabetical. Hold on, let me fix that. Halliburton. It looks like a gold stock, doesn't it? Black gold. I'd like to see it get above the 50, do something that tells me this isn't just a pullback or retracement in a downtrend. It's amazing. Oil's been strong and service been weak. Here's a driller. Kind of sideways, not that exciting. Schlumberger, a lot like Halliburton, even in the chart pattern. Yeah. We're going to go to the next group. Those don't look that exciting to me either. So this was sort of the story of my weekend review. If I looked at the things that were moving right now, I had very few buy stocks. I had a lot of stocks that are like Adobe that look great right now, but can you actually buy this right now? Adobe's had a huge run. Been nice to bought it at 160. Now it's 270. High jump's not at the top bar. Weekly bongo just turned green. I think it's worthwhile, just like I did on the indexes, to start putting channels on these guys, and you start looking at this, and you go, well, there I've got some room left to go up. It's been a beautiful stock. Earnings are out. They had great earnings. Maybe it runs up here. Whoops, sorry about that. Not so sure. It's extended. I'd rather buy stocks that are lower risk, more of a value play with a good technical pattern. No, I'm not into value stocks, but I'd rather buy stocks that are not run away. This was a great opportunity on Adobe when it pulled into the 50 and it had a mobile breakout from a squeeze and a kahuna, and that would have been a time to have bought this, and that would probably be in this area here. I just think it's already run a lot. Doesn't mean it's not going higher, and I'd rather buy this than some of the junky things I've showed you. Mobo, I've talked about this a lot over the last couple of weeks. I just got the feeling that this thing is going higher. It's still, I guess the best I could say is consolidating. Activision, these stocks have been hot, breaking out to all-time highs, or at least recent highs. I'm not sure I buy it up there. Here's an IPO. Down. I'm looking for stocks that are good places to buy. I didn't really want to do that, but that's okay. Let's go back to the warehouse view. Left, back. Next group down. I'm going to get some things good because I'm going to end up skipping in a second, going down to insurance. So I will go through these one at a time, typically at least the top 10, maybe on the weekend the top 15. Hold on a second. All right, so Tesla, I can't play Tesla. It's about a crazy, well, they thought Einstein was crazy too, by the way. He didn't do videos getting high as a CEO of a public company, though. They got to replace him. Keep his brilliance, but put adults into the boardroom. Tesla, not for me. Toyota, that was it on that group. I don't see anything here that I want to jump in and go by. I don't know why I didn't get forward, but doesn't matter. I don't like it anyways. So typically I will go through the top 10 lists. I want to spend more time with the ones I did like. So let's look at aircraft and auto parts. And there's 3 or 4 here that I think look different than others. Let's see if you guys agree. Boeing, great stock, great year, probably damaged a little bit by China. It's gone sideways since February. Is it ready to break out? It's in a squeeze. Had a kahuna, Mobo breakout. Earnings per share growth, at least this quarter, are strong. Relative strength is good. I like Boeing here. It's an expensive stock. Truth be told, I like Boeing a lot more back here when I bought it. All right. But that's what I want to find. But I'm okay with Boeing. The challenge I have with Boeing is it's going sideways. Do I want to wait till it breaks above these highs before I bother with it? It's still 20. It's 12 points away. It's 4%. I'm not sure. Here's some that I like. Transdigm. Uptrend. Pullback. Breakout. What did it do on the weekly? Broke above the weekly. Relative strength in the spider. Kahuna. Weekly bongo. I think this stock can still be bought. Kahuna, pocket pivot, Mobo breakout from a squeeze. This is what I look for. Unfortunately, also a very expensive stock. Rockwell Collins. Sideways forever. It is now taken out its prior highs. Strong on the weekly. Everything's greens up here. Rockwell Collins looks interesting. The X actually let's see it get above here, but notice it too went through the relative strength. Bongo and Kahuna, bunch of bongos on the daily. So something's going on in this group, folks, because we're now seeing one group more actionable buys than we've seen anywhere else. Now this one hasn't moved yet, but let's see. It had two kahunas this week in a squeeze. It broke above on the relative strength in the moving averages, had a kahuna. I just need that weekly bongo to turn green. I think Spirit Aerosystems looks good. So that was one group I liked. Another group that I liked was insurers. And the ones that came up here are life insurance. And let's see if there's any here that we like. Now here's the problem with them. They're all down here on the bottoms. But let's look and see what we see here. Kahuna, weekly bongo, break above the moving average, although the moving average, well, so the dash, I'm sorry, I was wrong. The dash is the S&P 500. That can't be, is it? No, that's the S&P, is this one here. So we have the weekly looks good. Pocket pivots for 2 days, a kahuna sitting on the 50, mobile breakout. What I don't like about this one is the overlying 200-day moving average is pretty close, but Prudential looks fine. MetLife, similar pattern. Check out my weekly. I've got my kahuna. Still got that overlying 200-day moving average. Lincoln National, a little bit more room up to there. Similar pattern. This is what's moving right now, folks. Principal Financial Group, PFG. Nice move off the 50. Kahuna, mobile breakout from a squeeze, crashing right through the S&P relative strength. And notice a kahuna and a bongo on the weekly. PFG, that's on my bias, I think. They've been beaten up, and they're all below their moving averages. Here's one that's not Athene Holdings. No dividend. Breaking out. Looks strong as well. All right, so let's go back into my warehouse view. So I think I showed you where some of the action is, aerospace and life insurance. I do that analysis on a weekly basis. Now, on the weekend, I'm a crazy person. All right. As I point out to my wife, I'm a crazy person because this is what I want to be doing. And so I have collected a series of bullish and bearish lists from various places. I have put them all into a group called consolidated buys. Which was this week, let me go into, it's like 1,200 stocks, I think, 1,325. And then I put a filter on them to filter out price, volume, and ETFs, and I got 684 stocks. I looked at each of these 684 stocks, and I got to a preliminary buy list. I took that buy list and I added it to the weekly high close dojis from my buddy John Person, because that to me is a very high value buy signal. I then took those into TradeStation, went into my advanced screener, and I developed a and I looked at the potential buys, and I ended up with some that I thought looked good and were things that I might act on. Since we were looking at performance group, principal financial group rather, a payer, let's take a look at that one right now. So I went through all my those stocks, and then I'll get back to where we ended up. So this is what I kind of look for on the John Person indicators. Now, one of the problems with all the insurance is that there's a lot of resistance. And this is these are automatic trend lines that are courtesy of Cigar, and these are in his TradeStation package. So that's a little bothersome, but we're right in between bullish and bearish lines. A breakout above these would be exciting. On the daily on the right, I have a new person buy signal coming in. I have a high close doji. Now, when you get a big move, you sort of get this little red dot on the top, which is a Q indicator of headwind that it's moved a lot in a day. But I'm not going to worry too much about that. Notice the histogram turned positive. The OBV is breaking over its moving average. This volume indicator is getting less negative. We're sitting in a squeeze. I know from my work that this is a mobile breakout in a squeeze with a PSA reversal and a kahuna and a positive force. My daily and weekly bongo are green, and I know from this here that my daily and weekly persons just fired today. So high close doji and a PPS buy signal on the daily. On the weekly, a high close doji PPS buy signal, also in a squeeze. So it's in a daily and a weekly squeeze. So I went through these stocks. I had a list of potential bearish plays, which I went through as well. Domino's was one. Again, it's got some support here, but it's got a new sell signal, a low close doji. The daily's in a downtrend. I put, and you notice the weekly bond goes red as well. So I create winners and losers, and then in HGSI I bring my winners into the buy watch list, and let's just look at what we found this week. I showed you UTX, Rockwell Collins, and Spirit. 3 aircraft and part stocks made my list. I talked about life insurance, and I got 3, Lincoln, Principal, and Voyo. I got property and casualty. I got Chubb, and I got Lowe's. So let's very quickly run through my picks for this week, and then I'll say goodbye. That's a small buy list, especially in a market that's been in a strong uptrend. Part of it is because it's been in such a strong uptrend that we have what's what I'm thinking of? A lot of stocks are overbought or they're extended, and I'm not going to put on the buy watch list extended stocks. I also have another flaw. My buy watch list, sometimes I don't put stocks that I already own because I don't want to buy them again yet. Although I will add to position. So Rockwell Collins, we talked about it. Big base, breakout on Friday. Kahuna and Bongo on the weekly, not quite above the S&P 500 on the relative strength, but I think Rockwell Collins is buyable right here. Earnings per share growth kind of matches up with the valuation. Spirit, again, down on the 200. What I like about this play is I probably only have to give it about $3 or less than 4% for my stop loss to encompass going back 3 months, the lowest days. And so I have very little risk. It has a Kahuna, has not yet crossed over, but did have a Kahuna on the weekly. All right, so let's go through alphabetical order. Adobe, we talked about it. I like it. It's just higher risk. That's why I was trying to de-emphasize it. It's run along. Allegheny Technology, a lot of steel players that I liked, and it's probably not ready yet, but I had a Kahuna, pocket pivot, break above the moving averages, a mobile breakout from a squeeze, and really strong earnings per share growth. And that's what drove my interest there. And they're tied to aircraft because it's an alloy that Boeing and other aircraft makers might use. Ultra, engine and transmission. This looked really good on person signals. And I'll go look at it real quickly. It's a bottom fish. It's not one that I would highly recommend. But why did I like it? I wanted to ignore it, but I've got bullish divergences. I paid attention to that on the MACD. I've got a I got a high closed doji on the weekly, high closed doji on the daily, OBVs breaking above on both coming out of a recent weekly squeeze. I might wait until I had a PPS buy signal, and yes, these trend lines bother me, but I thought this one looked interesting, although I don't love it. Apache, didn't pick a lot of energy plays. This one broke above its 50 in a squeeze. Recent Kahunas, pocket pivots, and it broke on the relative strength, and you have the Kahuna and the weekly Bongos green on the weekly. Appian, another application technology. Again, look good on the person signals here. Chubb is property and casualty. Got to get above this descending 200 because you think about gold, every time it hits this, it falls. But I'm about to break through on relative strength. I'm green here. I need a Kahuna to make me happy. A break above that 200, this might be interesting. Chubb. Cleveland Cliffs has already broken out and running. I took this maybe a week ago, 2 weeks ago. Great fundamentals. Moving. Here was the buy time. Pulled back into the 50 and ran again. ConocoPhillips, sideways. Looks like it's getting ready to break out. Notice a Kahuna. Bongo hasn't changed yet. Broke above relative strength. Set my buy stop above the PSAR and my sell stop probably around here. So I'm not risking much on ConocoPhillips. This has been one of my favorites. I kept talking about it, and we had a buyable gap up occur on Thursday, Ecopetrol. I'm just a sucker for earnings per share growth, but how can I stay at this price if I grow 100 to 200 times quarterly and I have a multiple of 18? Ecopetrol, obviously dependent on oil prices. Edwards Life Sciences, medical device stock breaking above the 50. Energen, another oil and gas stock sitting on the 50. Mobile breakout, pocket pivot, break above the relative strength on the weekly. Good fundamentals. FedEx. Actually like FedEx this week better than UPS. That same signal on the weekly, right below the S&P relative strength. General Dynamics, another defense play. This is pretty much a bottom fish, but notice the weekly bongo and the weekly kahuna, daily kahunas, pocket pivots. Healthcare services groups, building maintenance services, must have been on the trade station. Let's see. Because I bring in things I don't have. I bring in high closed dojis and person buy signals. So broke above the downtrending trend line. New weekly PPS, high closed doji, daily PPS coming out of a squeeze. That's why I liked HCSG. Lidos Holding, I don't know what they do. I notice a lot of drug companies, their computers say Lidos on it, so they must do IT support. Run up, bit of a flag, breakout, mobile breakout from a squeeze, pocket pivot, kahuna, makes decent money. Here's a bottom fish for you. Liberty, pullback, broke above the 50, had a bunch of pocket pivots. This is a bottom fish, beware. The weekly bongo turned green. Great earnings per share growth. In fact, this is a turnaround play where it was losing money, and now it's becoming profitable. A number of the Liberties went positive this week. Lincoln National, this is one of those insurance plays we looked at before. Lowe's, another insurance play. This one is breaking above its moving averages. Kahunas, pocket pivots out of a squeeze. Good earnings per share growth, at least short term. Norwegian Cruise Line, both this and Royal looked like they were breaking out. Owings, Illinois, this is an interesting pattern. It broke here, breaking above here. Couple of kahunas, mobile breakout from a squeeze. Again, this is a bottom fisher. Perhaps you should wait till it gets above the 200. PFG, this is one of my favorites of the week. We already looked at it. RealPage, I've been into this stock ever since it broke above the trend line over here. This one is a leader. Looks like it wants to go higher. Good fundamentals. We already looked at Rockwell Collins. We looked at Spirit. Blackstone, I've been in and out of this. It pays a great dividend. Fundies don't really help me much on this, and it just looks like it wants to break out and go higher. Pocket pivots, kahunas, mobile breakout from a squeeze. United Rentals, this is a long-term one that I've been in and out of. Great earnings per share growth, especially when you compare it to the multiple. Relative strength just broke out, as did the weekly price, daily price, pocket bongos, kahunas. Just want to see one quick thing here. All right, so I was wrong a little bit. So let me tell you, this dash is the S&P 500 moving average. Or that's the S&P 500 rather. The red is the relative strength of whatever we're looking at compared to the S&P 500, and the blue is the moving average. So when we cross above that moving average is when we become a higher relative strength than the moving average of the relative strength comparator, and that's when the signal triggers. It just looked funny to me. I just wanted to clarify that. Doesn't change how I use it. I'm still looking for the break above that. So United Rentals broke above its moving average. Big up day, Kahuna, Bongo. This one looks like it wants to go higher as well. Keep in mind, if we have a big turn down in the market, that this is what it did the last time. It went all the way down. You can't see that there, so let me make this bigger. This stock, it went from 120, and this was split, down to 36. So it really went from 240 down to 18. Not a fun run, I'm sure, to be in. United Technologies we looked at. Vendetta, this is one that I don't know anything about. It's a minor. I think it's too early, but I saw a couple of kahunas, mobile breakout from a squeeze, and I can assure you that this was a person signal because, let's see, here we are, a high close doji on a buy signal. Notice OBV, everything is trending up. Breakout above downtrending trend line here on the daily with a new recent buy signal. That's what drove it. It's a nice technical picture according to John's work, but it's still pretty low in its pattern. Would not be my favorite. Voya is another insurance company I liked. And then here's XPO Logistics. They work with truckers. I don't know if there's a takeout or something on this going on. I can't remember, but sort of a cup and handle and potentially breaking out. Good fundamentals, and that's it. So what have we done today? We've looked at the market, of which I'm cautious on, but think the least resistance is up. I maintain some exposure to the downside, mostly for protection purposes. And just like when I buy insurance, I hope I don't use it. And there's a price that I pay for that insurance. These were some of the stocks that I liked. I really like these defense plays and the insurance plays. I hope you enjoyed this. I did bring up my live meeting. Now, a couple other things just to help me out. If you please subscribe to me on YouTube and hit the like buttons because it gets me noticed and gets me more viewers. And on that note, have a great week, everybody, and thank you for watching.